Think it's really important to learn how to let your money work for you and have your money make money babies, as I would call it. So stick around in this video. We're going to talk about your money and making money babies from there. Good afternoon. My name is Adam Kahn, and I'm the Rational Investor. Today is Sunday, February 4th. I hope you're all doing well. So, what do I mean by money babies, and what do I mean by making your money work for you? Stick around, I'll get into that. But before I do me a favor if you haven't already, hit that subscribe button. Maybe if you could, smash the like button. I really appreciate the support. That helps YouTube's algorithm and people find the channel. And if you're enjoying the content, I really appreciate that. I want to say thank you. It's been pretty cool watching the channel grow. So, money babies. That means to me, my money working for me in order to grow more money. It's not hard to do, and it's a matter of finding the investments that fit you. Now, keep in mind, this is not financial advice. You have to make your own decisions when it comes to your finances. You shouldn't be listening to me, or for that matter, anybody on YouTube, and making your decisions because everybody's life's different, and what you need is different than what I need. The other thing is you may want to search out a financial advisor or somebody who specializes in this stuff, especially if you have an exorbitant amount of money or a large amount and aren't real sure where to go. That being said, if you see people in the comments like for Miss Mary or someone promising all sorts of returns, that's likely a scam, so I would stay away from that stuff. So my point is, I don't want to work for my money. I don't want to work until I'm 70 years old and constantly be making just a little enough to barely get enough to potentially retire, where I'm retiring with Social Security and every penny scrimping that I can because I didn't save along the way and learn how to make my money work for me. Now, it can work for you in dividend stocks, but I don't want to get oversensitive to dividend stocks. I really want to invest in the companies I think are the best investments, period. It shouldn't matter whether that means it's paying a yield as a dividend, but I want to see the total return be the best it can. What companies do I love? I mean, I think they're right in front of our faces. I think it's Google. I think it's Amazon. I think it's Meta or Facebook, who I know already crushed it in last earnings, but I think there's potentially room to go. You just have to be in it for the long term and hope that they continue to grow at the rate they're growing at. I think Nvidia, and I don't own it. I wish I did. The other three I do. I think AMD might be on there as well because they're continuing to grow and put out new products. I think there's tons of companies that are right in front of our face. Now, also keep in mind, I invest in things like ADM or Archer Daniels Midland when the bad news came out and it fell. And then I do like some dividend stocks. I like Pfizer, even though it's a dog right now, but it pays a nice dividend. And I picked it up around $30 a share. I try to get a nice big round grouping of these stocks and stick with them for a really long time. I like AbbVie if you're curious. I think Microsoft is a great company. And again, I don't think you have to dig too deep. You don't have to look for those diamonds in the rough. Because what I find, like, I'll give you an example of one that I have. Sava Sciences. The ticker symbol is SAVA. They've come out with something to help with it's pretty funny that I'm forgetting it. Alzheimer's. So I think it's funny that I'm having trouble remembering that. And I don't mean it sarcastic, which is a terrible disease. But they think they've come up with something that legitimately helps with it. There's been all sorts of controversy about it. In the meantime, the hope is that the thing shoots up to $150 a share, and it's only trading at $23 as of Friday. But it's been doing this now for years. So by the time it finally comes out with its medicine, if it ever even does, it's possible that I just would have been better off in just a good long term boring company. I love Pepsi. I think that's a great company. It's well diversified. I like it a little bit better than I like Coca Cola. Now, I don't know if you guys care to ask what I like or what I don't like. And I did another video on the companies that I have in my safe deposit box. And really, they're all tried and true, boring, big, growing companies. And that is me creating more money babies whether it's in a dividend or just by the stock going higher in price. And my goal is that I can use that money to help live my life so that I don't have to wait until I'm 70 to be able to retire. Now, me personally, I probably wait a little too long. I probably could just downsize a bit and be fine and whatever else. But I think it's really important. The most important thing is just to put away and learn how to invest and learn how to make your money work. You can work for your money or you can let your money work for you. And as your money works for you and it grows, you can then rely on that money and not worry about your job so much. The nicest freedom for me is if I'm unhappy at the job I'm working at, I don't have to worry about taking the time and moving on and finding something else because I know we'll be okay to float for a while. That's a really nice comfort in whatever job I do. Now, I know those of you beginning out that are in a tough position, that aren't making enough to cover your bills, are sitting there looking at me thinking, oh, that's so easy to say. But as I said in some comments, I don't know if I put it in a video, I started out working at a deli, mopping floors, cleaning the windows, taking out the garbage, and doing all sorts of things that weren't so much fun. But it was an ends to a means and it was a starting point. I then moved on to other things. And even when I graduated college, I joke about my first job. The guy says to me, I see here you have a college degree. Normally we start people at $5 an hour, but since you have a college degree, we'll start you at $5.50 an hour. So I make jokes that my college degree got me 50 cents an hour. The reality is, I just wanted to get down to the exchange and I didn't care how much it paid. I knew if I got the job down there, there was opportunity to grow and figure out, like, there were tons of people making tons of money, and I knew that I would figure out a way to get in a position to do better. It wasn't about that job, it was about the opportunity it put me in. So I was always seeking out where I could do better and where I could grow. It's not just how much do I make today, where can I get that I can get in a position to put myself in a better spot. Then, the minute I was doing better, I saved as much as I could. I stayed in a studio apartment. I didn't move out into anything bigger until I was making a good bit more and it was really affordable so that I could continue to put away into the retirement account. I could continue to put away in a stock account. I could continue to invest in collectibles or whatever it was that I saw opportunity where that money can continue to grow into more money. Now, obviously, when you invest, there is no guarantee it will work out. But while a lot of people are scared with all the news and all the gloom and doom and all the things that could go wrong, you never want to be so scared to just sit on the sidelines and not invest. Sometimes it goes up, sometimes it goes down. It's okay either way because even if it goes down and you're saving money, it's still money saved on the sidelines. If you're spending it, if you're going out to too many dinners, if you're buying too many cups of coffee, if you're going out with your friends too much and you're not putting it away, maybe you'll find yourself later in life in a position that you just don't want to be in. And I know it's really hard to think about 30 years down the road or whatever that timeline is and where you'll be, but I can promise you, saving and putting away, you'll be so much happier to have that safety net and that cushion than think about needing to rely on Social Security, which may not be there. I mean, we're bringing on so much more debt as a country, and we're net negative on these things, and more people are retiring than going to work. The birth rates are lower. Like, we don't know what the future will be, and we don't know what'll be there and what won't be there. So I don't want to rely on the government to support me, as I don't know that they'll be able to. It's an interesting thing in Singapore that I saw, that whatever job a person has, they have a forced retirement where 20% of their paycheck before the person even receives it automatically goes into their retirement account. It's not even an option. Well, they learn to live off of that lower paycheck. And I think that's something that we could learn from as well. It doesn't look at, they don't look at things as such a negative. Maybe you have roommates, maybe whatever it is, to live in a smaller way. Um, but I find if you make a certain amount of money and that's all that comes in on the paycheck, you learn to live off of that. The US expenses for insurance are so high and taxes and some of the other stuff. I know how hard it is, which is why it'd be really nice if that paycheck just had less in it and some of it was being forced to savings. I also want to say something about real estate with all the gloom and doomers. If you're buying your primary residence, the place that you're going to live in, especially if you're married and you have kids, I don't know. Now, everybody has their own way of looking at things, but I don't know that I would look at that as an investment. I would look at my home as the place to live for me and my family. If I'm financially secure and I can afford the down payment and I can afford the monthly payments comfortably, and I know I'm going to live in that area for a long time, I'm not going to worry about am I overpaying or not, and is this going to be a good investment for the future. What I worry about is does that house fit my needs and do I like it? And hopefully, do I love it? If it goes down in value and I can still afford the payments and I still love the area and my family is happy, I'm not so concerned because if I pay my monthly payments over the next 30 years, the house will be paid off and it'll be worth whatever it's worth. And odds are it's just going to go to my kids anyway. I really don't sit there and think, gee, I hope it goes up in value, because if it does, so does the rest of real estate as well in a similar fashion. So if I sold that home, let's say I bought a home and I'm obviously totally making numbers up for 500,000 and oh, I'm so happy 5 years later it's worth 600,000. If I sold that house, then what? Unless I'm looking to downgrade because I'm looking for a smaller home at this point, every other house has gone up as well. It doesn't matter that I've made that money. And now I've paid out extra commissions and fees to the state and fees for this in order to make a new transition. And unless I'm making more money and able to upgrade, then what's the difference if the house went up? The reality is, if I want to upgrade, I would rather the house go down in value if I'm making more money and doing better, because so did the more expensive house that I'm trying to upgrade to. People get over caught up in, is it the right time? The right time is, are you in the right position? Not is the real estate market going to continue up in value. If you're buying an investment property, I feel completely differently. You should do the analysis. You should see what your return on the investment is. You should do the best due diligence you can to determine if that's a good investment. But if you're buying your home for your family, I wouldn't listen to all these people on YouTube or the realtor or anybody else other than myself and my trusted people as to can I afford it and do I like it? And then I wouldn't sweat about anything else from there. I would pay attention to the electric bills and everything else, making sure I'm in my comfort zone. But one of the nicest things to me about owning my home is if I want to paint my walls purple, I can paint my walls purple. Now, I don't like purple. Obviously, that's a over exaggeration, but I get to make the kitchen the way I want it to be. I can upgrade the bathrooms, I can do floors or whatever it is to make my home my home. And when I'm renting it, I don't get to do that. Now, if you're moving around a lot and you don't know this is going to be where you stay for a long time, or you like the freedom of being able to just up and move and not worry about a property, maybe owning isn't for you. But just don't overthink this investment aspect if you're buying a house to live in. Anyway, that's my best advice on buying a house. Um, by all means, I think save, save, save. And again, this is not financial advice. You guys need to make your own decisions on it. Sure, I'll talk to you tomorrow. I'm excited for this week with the markets, hoping they have a boom. I hope they just keep going and going. And don't forget to hit the thumbs up button, hit the like button, make some comments. I like talking about this stuff. Have a great day.